Hello friends, we'll be discussing the next topic of bank reconciliation statement, that is procedure of reconciliation. So when we speak about procedure of reconciliation, we basically understand what are the steps that you need to follow. Make sure you go through this video over and over again if you're not able to understand, but that's the last course because you will be able to understand. So in this video, you will be able to understand these few things: the methods that you're supposed to do, the steps that you're supposed to follow, types and variants of books, and the details about every other book that you're going to deal with. These are the things that you need to understand. So, the first part that you'll be dealing with is the steps that you're going to follow. Let's mention it down, or rather, we have already mentioned it down for you. Let's underline that thing. Now you have two books into questions. The first one is cash book, second one is passbook. So these two books that you have with you right now, as I said, your whole chapter, your whole questions will be revolving around these two books itself. You are going to play with these two books. That's that. Nothing much, nothing less. So cash book and passbook is what you have. Now, when you talk about cash book, it's the owner's book. It is the record of what owner keeps it. So it is the record what owner keeps in his records, or rather in his book. That is his book. Exclude that out. That is my book. Don't take it to yours. Now the next one is passbook. That is yours book. You are the banker. You have the passbook with you. Now we too have these books with us. We have mentioned the details in here. That means cash book, debit side, credit side. What is on the debit side will be addition. What is on the credit side will be subtraction. Let me explain you how it works here. So the book that we are talking about in the first place, that is cash book, that has debit balance and credit balance. Rather, both the books have debit balance and credit balance. But whatever addition in bank balance, or rather in the balance, if this is your balance of cash and you're depositing, you're increasing the bank balance, it will be added. If it is added in your records, that means in my records as cash book, I will be debiting it. That means I'll be adding it up. Similarly, if I am adding it up, I am debiting it, you as a banker will be crediting that thing into my account. Hence, every time we see a bank passbook, we see 1000 credit CR, 2000 credit CR, 10,000 credited. That means that refers to the amount that has been deposited into your account, or into your account itself. That means when we're talking about debit side of cash book should be equal to the credit side of passbook itself. So this will help you in reflecting the bank reconciliation statement. Now, once we are done with the debit and credit side, we'll come to the credit side of cash book, whereby all issues happen. That means if you are issuing a check, it goes from the credit side, subtraction. Now, cash book basically has addition side and subtraction side. If money is coming into your account, you'll put it on the debit side because that is the addition side. If money is going out from your account, or you're paying out the money to someone else, it will be subtracted. It will be mentioned on the credit side. Similarly, for passbook, if money is coming into your account, it will be on the credit side, that is addition. If it is being subtracted from your account, it will be on the debit side. So if you can match this thing, debit side of cash book is equivalent to the credit side of passbook. Add. Similarly, debit side of passbook, or rather debit side of passbook, is equivalent to the credit side of cash book. Subtract. That's what we have mentioned down there. Debit side of cash book here is equivalent to the credit side of passbook. Similarly, credit side of cash book is equivalent to the debit side of passbook here. Now, the first step that you have to check is to figure out which book is favorable or unfavorable. Yes, this is one of the most important questions to figure out whether you have a favorable book or whether you have an unfavorable book. Favorable book as in positive balance. If your balance, or if your starting point, see, your question will start in a specific format. You will be given a starting format or starting point. You will have certain adjustments in between. Then you will have the closing point that is supposed to be figured out. So you will be given the opening balance, that is the starting point. You'll be given all the adjustments. You need to add less, add less, add less everything, and then figure out what is the closing point there. So once we talk about that opening statement or opening point, let's figure out what is that opening point there. Is it related to cash book? Is it related to passbook? That's your first step. Check which book opening balance have they given. Is it the cash book? Is it the passbook? That is what we have to check first. Second step is to check if it is given for a specific book, that means cash book or passbook, is it favorable or is it unfavorable? That means whether the balance they have given is positive or is negative. That means positive will be positive balance, negative will be overdraft balance. Whether it is positive or negative is what we have to check here. Step 2 is cleared. Once that is done, then you have to use the formula that I'm going to explain you right now. So the formula here goes is very simple. You have to check the relation of the transaction. The third step here is to apply the formula. Now, how to apply the formula is very simple. Supposingly, if we have the starting point of this specific transaction being the cash book, if cash book is favorable that they have given, so we'll do one thing. I'm marking that in red thing right now. So if cash book is the starting point here, that means we'll tick mark as correct cash book. That means we'll tick it correct because cash book has favorable balance as per question mentioned. So if cash book is correct, we have tick marked it. Now, if the cash book is correct, that means the other book is incorrect by default. Please make sure you pay a lot of attention on this tick mark because this is one of the key factor of understanding the formulas. Now, the next transaction or the next step that you have to understand is the transaction or adjustments that are given to which book is it related to. That means the effect is given in that book or the effect is yet to be given in that book is what you have to check. If the effect is already given, then you have to look for the next transaction. That means let's figure out one thing. If check has been deposited into your bank account, rather if you have deposited certain check, in which book will you make the first entry? This should be your question. Whatever adjustments they have given, in which book will you make the entry is what you have to ask yourself. If the question comes like this and if your answer is cash book, then that is the answer. If the question comes like this and the answer is passbook, then that is the answer. That means that book has to be excluded because the effect is already given there. If you have issued a check, that means you have already given an effect in the cash book. Correct? The second effect is supposed to be given in the passbook. Now that is what you have to do. If the balance is favorable, this is what you have to check. If the balance is unfavorable, you have to check which book is the first effect going to be in. Understood the difference between this? Favorable and unfavorable? If the balance is favorable, then you have to check where is the second effect going to be. If the balance is unfavorable, then you have to check where is the first effect going to be. That is very clear. This is what you have to do. We'll understand more about this when we try solving certain examples related to favorable and unfavorable questions. So need not worry about it. But let me give you a gist of this. Now, if the favorable and unfavorable balance concept is what you have to check after. So if the favorable balance is the starting point of any book, be it cash book or passbook, any book doesn't matter here. The matter thing is favorable or unfavorable. So if the favorable balance is given, be it of any book, cash book or passbook, then that is the correct book. So if cash book is the favorable balance, then cash book is correct, passbook will be incorrect. If passbook has a favorable balance, then passbook is correct, cash book is incorrect. So that is what the starting point is. So let's take, for example, starting point of this specific illustration will be cash book favorable balance. Now cash book is correct, passbook is incorrect. That's right, correct. So what you have to do here is that whenever the starting point is favorable, the question that you will ask is which book the effect has been already given. That is your question. If the past book or rather any book is unfavorable, that means the starting point is unfavorable, then you have to ask yourself in which book the first entry will be, or rather which book will be first affected with. We'll skip that part aside, we'll come to favorable first. Now when it comes to favorable, let me explain you with this example. Check deposited into your bank account. Check deposited into your bank account. Rather, check deposited by you. It's simple plain statement. Check deposited by you. Correct. Now, make sure, or rather, you ask yourself if this is cash book is the favorable starting point that has been given, that has been already given. Favorable book is cash book. So cash book is correct, passbook is incorrect. We have already known this. Now, with this question, we are asking you if check is deposited in your account, that means which book will be first affected? Correct. That's your cash book that will be first affected, because if check is being deposited, that means check came to you first. You have recorded that into your cash book. That means bank column of cash book, and then you have given to the bank, right? You didn't just go to the bank and take the check, deposit it. You didn't do it like this, correct? That means you recorded that into your cash book first. So if cash book the effect is already given, that means you've already added the balance there. Skip that book aside. Take the next book. So, in favorable balance, wherever the entry has been already done, skip that book aside, take the next book. Whatever next book is left, take that. Now, here, if the passbook is incorrect, that's the reason I told you, keep a mark on those checks. Because if cash book is correct, passbook is incorrect, then here comes the formula that you have to apply. So, now in passbook, what do you have to do? If check is deposited into your account, that means in passbook, will it be on the addition side? Will it be on the subtraction side? That's correct. It will be on the addition side. So here comes the formula now. So if you have to add it and it is related to the incorrect book, rather the effect is going into an incorrect book now, you have to subtract that much. You have to subtract that thing. So the actual question would be check deposited but not cleared. So if you have added that thing and if it is related to the wrong book, now the second effect is going into the wrong book, correct? You have to add it. Then the formula is add. If it is wrong, then it has to be subtracted. Similarly, if it has to be subtracted, if it is in the wrong book, the second effect is going in the wrong book, then you have to add opposite of it. On the contrary, if you have to add and the effect or the second effect is going in the correct book, that means in the cash book. For example, bank charges. Bank charges directly debited from a bank account. This is the answer, or this is what the adjustment is. Tell me, which book will it be related to first? Correct, your bank book. Your passbook will be first affected because you have no idea, because I didn't go and update my passbook. So I will have no idea about it. But my bank book will be already updated with it because it has been already debited. Now here, if the favorable starting point is cash book, passbook is incorrect. Passbook is incorrect, right? So we'll take that book off because the entry has been already done through it. Now the second entry has to come into which book? Cash book, because passbook is already done. Now cash book is correct book. So in that case, if it is bank charge, is it going to increase my balance or decrease my balance? It's going to decrease my balance, correct? So subtraction. So if there is subtraction, if it is related to correct book, then you have to subtract it. Hence, that has been mentioned there. If it is subtraction, if it is related to correct book, subtract it. On the contrary, if it is supposed to be added and if it is related to the correct book, then add it. So these are the steps, or these are the methods that you need to look into or look after whenever you have to go via procedure of making the bank reconciliation statement. Accordingly, you will be able to understand when we go ahead with separate reasons or different reasons for the similar kind of books, or rather different books are being prepared, passbook or cash book has been prepared, or rather different illustrations. Basically, when we go with different illustrations, we'll be able to understand how exactly we are going to prepare this. So this is what we had when it comes to procedure for reconciliation or methods of reconciliation. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.